But let's shift focus to some of the earnings and focusing on Karnataka Bank now because this time around the company has reported a good set with a jump of almost 171% onto their profits on a YOY basis. Let's try to find out what is the outlook going ahead when it comes to the number growth, and to talk more on that we have Shekhar Rao, who is the Executive Director and Interim MD and CEO of Karnataka Bank. Hi, very good morning, Shekhar. Thank you so much for joining us today on ET Now. Firstly, congratulations on a good set of numbers. But looking at your internals, this time if we see, then the bank's loan growth was quite lower than when we compare that with the larger sector or some of your larger peers. So what's holding the loan growth back for you?
Yeah, firstly, thank you for your compliments. Yeah, we have indeed declared fairly encouraging results. In fact, it is ahead of our peers. Also, on your specific question on the loan growth, if you see our Q3 results, we were tracking along at a 12% growth in our asset book. In Q4, we faced this difficult decision of whether to continue this momentum or retire some low-yielding advances, which were at rates below the GSEC rates. So since our financials were looking healthy, we took the decision to bite the bullet and we retired some of these low yielding advances, and that's where our advances growth look a little muted. This has also given us an opportunity to conserve some liquidity for the retail plans that we have up ahead.
Right. Good morning, Mr. Rao. This is Cheryl also joining in the conversation. Yes, just like Srishti, I'd also like to echo the similar sentiment. Congratulations on good set of numbers. If you look at Karnataka Bank over the last 1 year, on all parameters, there's only a marked improvement that the bank has registered. I want to ask specifically on your NIMS number. If you look at the quarter gone by, your NIMS stood at around 3.87%, which is a marked recovery when you see on a quarter-on-quarter basis. Where do you see NIMS headed in the new financial year, that's FY24? Do you expect to surpass these levels or maintain these levels?
Our NIMS will be going forward. The NIMS will get moderated a bit. We won't see us surpassing these levels. In Q1 and early Q2, we would also see some increase in cost of deposit. We see this NIMS to be range bound between 3.5 to 3.70.
Mr. Rao, if we look at your asset quality now, so for the whole of the banking space, we have seen that improving. But sequentially, if we see, then your NPA numbers have seen a rise, as well as your GNPA numbers on a YY basis that have seen a growth over there. So what is keeping your NPA numbers at an elevated level, and going ahead, any guidance on both of these numbers?
Yes, again in Q4, the top line numbers gave us this opportunity to do some accelerated provisioning. So we identified some stressed accounts and we moved them. So there we had the opportunity of qualifying them as GNPA and do an accelerated provisioning as well. That's why you would see a higher provisioning levels in Q4. This is a one-time exercise, and going forward, you will see this coming down significantly. We basically relied on the health of the balance sheet to do this exercise.
All right. Let's talk about your ROAs then. Where should one actually see ROAs for Karnataka Bank in the new year, that's FY24? And what are the larger goals of the banks in terms of growth and ROAs for the next 3 years, given the fact we have a new leadership that is at helm at Karnataka Bank?
Yeah. Firstly, on the new leadership, in fact, bank has identified the new managing director, a career banker, Sri Krishna, will be joining us. He comes from a stellar lineage, having worked with Geo Payments Bank, having run his own firm and HDFC, and he's been part of the HDFC founding team as well. He comes in with impeccable credentials. This is in line with the bank's stated goals of transforming and inducting laterals of high quality. So we welcome him to the bank. He'll formally join the bank on the 9th of June. Coming to your ROA question, I wouldn't hazard a guess at this moment, but we will see ROA to be around current levels or marginally higher than what it is today.
Okay, Mr. Rao, your costs are
And your last question, the third point of what will be the bank's goal going forward. So this coincidentally is our centenary year. We are in our 100th year of existence. So we have planned a fair bit of action during the upcoming year. But on a strategic level, the big change is our retail focus. In fact, as we speak, we have in fact realigned our organization structure to focus on retail. We now have a more linear retail focused org structure with verticals for branch banking, retail advances, so on and so forth. We also have a product team which will support the sales team. These we've rolled out product simplification in gold loans. Our home loan also has the home loan product has also seen an upgrade. We see our headline interest rate in home loan at 8.75, which is fairly competitive. We are increasing our asset processing hubs, moving from 3 to 5 to 8 during the year. This will also improve our TAT. This will give us a special, this will give us increased ability to scale up retail and MSME as well. While we are doing this, we are redoing the entire underwriting process and simplifying how we underwrite retail loans.
Mr. Rao, your costs are trending down currently. So should one expect to see a spike in your cost to income in FY24, and where are you investing currently?
Yes, the costs are trending down currently, but we will see some, it'll see a marginal increase from current levels because we will see an increased activity in employee provisions and also addition of headcount, particularly in the technology, product and digital space. Most of our investments would be in the tech and digital space. We are consolidating all our tech and digital into a factory in Bangalore, which will give us the entire, and this office will be akin to a fintech and less similar to a bank. So our investments will be in this space. We also are making some small infrastructure investments aligned to our centenary year. So we have a commemorative centenary building coming up. But large investments would be in hiring for specialist resources, particularly product, technology, digital, and in fact, our tech budget for the upcoming year has seen a 80% increase. So these would be our focus areas.
And lastly, let me just ask you one last question, Mr. Rao. What are the larger risks that you foresee in FY24? We did our talk about where do you see your NIMs, your gross NPAs, but what are the larger risks that you foresee in FY24? And also, where do you see credit costs and provisioning trending from your own? I know you alluded to this particular question even or other topic in your previous answer.
In fact, as a sector, I would say the uncertainty associated with the macroeconomic scenario, the rate increases, etc., we have almost seen the worst behind us now. We have seen greater predictability going up ahead. But there will be, so one minor risk would be on the compression of NIMs, which we wish to plan to address via change in product mix. As we see now, our most important focus area would be the need to grow and retain and grow our market share. And this is where we will focus our collective energies.
Okay, Mr. Rao, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the growth outlook for the Karnataka Bank.